Hello, Mavericks. This is Rob Reinhold. So nice to see you here. And here we are, the very last trading day of 2022. We're going to put a bow on this thing and send it into the history books. But we've got one more day left, so let's talk about it. Today, we actually had an up day. We had 2 down days on Tuesday and Wednesday. Markets were closed Monday. And today, we got an up day. The move was very nice. Dow up 1%, S&P up 1.75%, NASDAQ and the Russell both up 2.5%. Those are really, really nice moves. However, we need to keep them all in perspective. We're literally flat for the week. These moves, they were big today, they were strong, but all they did was simply take us back to where we were at the start of the week. Not that big of a deal. Oil down a little bit, gold up a little bit. Not that big of a deal. So we got this big market rally after 2 days of selling. Now look, the news always tries to attach some significance to why the markets go up or down. And look, sometimes the news does move the markets. But then sometimes the markets are literally just moving, and then the news figures out a story to explain why it happened. And I was reading that, jobless claims. This is the big reason why there was a rally today, is because jobless claims grew by 41,000. Okay. The jobless claims are a weekly number. No one really looks at them. And so look, maybe some people were looking for a reason to get bullish on the second to last day of the year. I think the market was just due. We were down too much for the last 2 days. It was due. I don't want to say there's really all that significance here to this jobless claims number. Maybe some people are thinking that unemployment is going to rise, which is what the Fed wants. Let's not look too much into it. Advanced decline line, strong day. 83% of stocks up today. The 50-day moving average line has not changed in the last week, so we still have more stocks in bearish moves than bullish. Let's take a look at the charts. And as I mentioned, take a look where we are. We're literally where we were last week when the market closed. We're slightly above it on the S&P, slightly below it on the NASDAQ, but let's really take a look and see where we are. We expected to see some bit of support in this level. We're not surprised at all that the market is coming down here, testing these levels, finding support. Take a look at what's happening though. The market isn't bouncing. The market cannot put together more than one up day. We've had up days. We had one last Friday. We had one last Wednesday, but you can see they're just 1 day pops. We might get a second up day tomorrow, but it's not going to take us above this resistance. Or look, I could be wrong. Maybe we have a monster day tomorrow. I don't think we get a monster day either up or down tomorrow. I think we close the year in this low base where we just had this really big reversal up here. We crash down and we're just low basing here. When we come over here to the NASDAQ looks absolutely atrocious. You can see here, we were down at support levels. You should have been expecting a bounce here at 260 on the Qs. Okay. Look, we've had 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 11 days down over the last 11 days. That's a big move. That's a really big move, so we're likely going to get some relief. And really, we could go all the way back up to 280, well, probably up to the moving averages, before we really have to worry about, this may not be a downtrend. We know that in downtrends, things go down, they bounce, they go down, they base, they go down, they bounce. Like, we know that this is what happens. So here we are. We had this big first wave down. We're likely going to get a little bit of a bounce. We might see that at the first of next week. But in the end, we're still below the 20. We're below the 50. These markets are still bearish. We take a look at the heat map. You can see today was just a strong day. It was a strong day. Okay. Great. We've got 1 day that was strong. This week, we're flat on the week. Let's not read too much into this. The chart is still saying that we need to be more short than long. However, we are at an extended point. At this point, the S&P is basing. The NASDAQ is really extended. It might be bouncing. I could easily see the NASDAQ maybe having a couple more days of a bounce. But ultimately, we have to keep with our technicals that when we're below the 50-period moving average, we like to be net bearish. So that means we're at a -2. We're below the 20, we're below the 50, and one of the moving averages sloping up while the other sloping down. We're not at a full -3 yet, but this is moderately bearish. And again, low base. We're low basing here. If we break out above these moving averages and the topper end of the base, okay, we might have to change our outlook. But until that happens, we are at a solid -2. So let's take a look at trades. I'm looking at these trades really for the next 7 days. So we're going to wind down this year, and then we're going to go into next year. I don't like to make a lot of trades at the new part of the year, and let me explain why. This is where, again, new things happen. Money is earmarked for new things on January 1st. Throughout the year, money flows in and out and in and out, and it's mostly based on algorithms that are running. They're based on people's decisions and emotions. But there are a couple times a year where things are actually time-based, and a lot of people do rebalancing. Now, what rebalancing is where you take a look at your portfolio and you make changes. One of the changes people typically do is asset allocation rebalancing. What they do is they sell off anything that has been a winner and they buy anything that's been a loser. This is why every single month of the year except one, trend trading works. What I mean by that is that the strongest stocks tend to go up throughout the whole year and the weakest stocks tend to go down the whole year, except for 1 month of the year, and that is January. We get the January effect, where the strongest sectors, they actually sell off, and the weakest sectors typically get a little bounce. Look, on these seasonal readings, we can't say that we know it's going to happen this year. We have no idea. Every year is different, so we can't just make a blanket statement. But history says that this is the time where we typically see some of the underperformers have a little bit of a bounce, the outperformers take a little break. We'll be keeping an eye on that, and if we see it happening, we'll definitely communicate that with our traders. But until then, I think it's really tough to stick your neck out here. So let's talk about some possible trades that I think are looking fairly solid. Gold. Okay, this is the GLD, pretty boring trade, but you can see here, we've got a nice ascending triangle pattern here. A lot of people like gold. They're saying, oh, gold is great. To me, this is really a play on the US dollar. The US dollar is weakening. A very strong dollar has been hurting international stocks and also hurting exporting companies. That is coming down. Now, gold and the US dollar have an inverse relationship. When the dollar goes down, gold goes up, and vice versa. Here we are. I like the play on the dollar short. I'm looking to be short dollar in Forex trading going into January. So I like this trade quite a bit. It's not so much about gold. This is a short dollar play, and you can see we're ready to break out. I think 172 is a pretty good target. So I'm looking at like a 168, 172 bull call spread for the month of January, the regular January monthly options expirations. I've got 2 sideways trades. Look, sideways, I'm not looking to stick my neck out, so I'm saying, hey, what are the stocks I think aren't going to make a big run or a big fall? And here we have Carrier. Carrier's an industrial company. They sell heaters and air conditioning. As you can see, we're stuck here. Big question is, where is it going to be on the expiration date of your options? Right now it's at 42. And I like 42 as a short-term point, but it depends on how far out you go. So let's say you go out to the first week of January. You need to make a call on where the stock is on the first Friday of January. If you think the market's going to be a little bit higher, then you want to probably shoot for like a 43. A 43 as the middle point of your butterfly. If you think the market's going to be a little lower, I think you shoot for a 41. If you think the market's going to be about where it is, then you do a 42. So that's all you're looking to do is just open up a butterfly for your time frame. If you want to go out further, you just need to pick what your ranges are. I think the market's going to be a little bit weaker, so I'm looking at a 41. So looking like a 38, 41, 44 butterfly for the first week of January. Another butterfly here is WMB. This is in the oil and gas sector. You can see here, we've got moving averages that can't really make up their mind where they're going. Ultimately, we are going between 30 and 35. 32.50 is my middle point, and I do think this one's truly neutral. So I'm looking to do a butterfly at 32.50 if there is 50% strikes. If not, I've got to pick 32 or 33. So again, we're going to be looking at like a 35, 32.50, 30 butterfly, saying this is just going to stick within this area. And let's talk about a short. I don't have any great shorts out there because, again, everything's extended, especially in technology. I really want to bounce to sell into. Apple could easily bounce up to 135. But I want to take a look at today's candle. Take a look at today's candle. We are not back to where we were at the first of the week. We've had some really nasty candles ever since we broke, we retested, we failed miserably. I don't think Apple gets back up to 135. That being said, it's not ready to take a bearish position on right here, right now. I would love to see one or two more up days, somewhere in like the 132, 133 area. That would be wonderful before we get a reversal candle and a confirmation candle to sell. As I said earlier, I don't see anything great on the short side to enter right here, right now. I think everything is due for a bounce here, especially in tech. So let's wrap this up. I expect a tight candle tomorrow. I expect there to be movement overnight. The market will gap up or down, maybe 0.5%. There's going to be some activity in the morning, and then people are going to go. People are going to shut down systems. They're going to go, and this market is likely to whimper out at the end of the year, not roar. I think that's what we're going to see. We have no economic reports, no earnings reports. I think, again, the activity's in the morning, and then we just drift sideways throughout the whole day. I would not be surprised at all if this week ends totally flat for the week. That would not surprise me. And that's what my opinion is. We're going to end flat for the week. Next week, we're likely going to get one move or the other, and I think it's going to be to the downside. All the technicals say down, so that's where I'm leaning my portfolio. Until this market proves to me that it can get above the 20 and above the 50 moving average, I have to stay bearish based on technicals. Well, that is the last market roundup for the year. Everyone have a great, happy new year. Everyone be safe, and let's get back next Tuesday when the market opens up ready to go. Goodbye, everybody.